Good morning, everybody. Make sure I got everything going. Go over here and post this link in the chat. I don't know why I'll be putting it over here. Well, I know why I'll be putting it over here, but you know, don't nobody use it on purpose. Everybody that ever use it, it be like, oh, I saw the link and I thought I was supposed to click this. Again, this is the link for the black spiders. You may have questions and you want to pull up on the stage with me, as you see right here, and ask a question. That's what that link is for. That link right there. If you're on YouTube, don't go to your membership channel section and click the link. If you're on YouTube, just go wherever you go to watch the video regularly. Now, since I'm sitting down, paying my bills, yes, I do. Like, normal people have like a checkbook like this and write everything in the little ledger. No, I use a tablet like this right here. This is my ledger. I just got my checkbook in here. I don't have the little thing which you write it in there. Runs out too quick. This right here, life-changing. I started doing this years ago where I would just put lines. I would mark lines on the section. Life-changing. It lasts forever and a day. Now that we have officially separated the wheat from the tare, here to learn and share. Good morning to you. The birds are chirping. Tweet, 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 tweet. Tweet, 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 tweet. Hey Siri, what's the temperature right now?
It's 49 degrees outside.
It's a cool 49 degrees outside. Not too bad. Not too cold, not too frigid. The birds are chirping. Speaking of birds are chirping, this has nothing to do with birds. When I was right up the street, the main strip out there, when you come out of my neighborhood, it's a 4-lane street. Not a divided highway, just got the they got the turning lane in the middle. 4-lane street, right? Main, something that you ain't just gonna be trying to run across. Speed limit in some spots 45, but the most part is like 35. But it's the main drag, right? Those animals they've been getting the business. They've been getting the business out there lately. I'm talking about all kind of roadkill been out there. I'm like, yesterday it was a big old raccoon laid up in the turning lane. So it's like you got to decide, am I going to get over now and let his body go under my car with the risk of him getting caught by the little thing that be hanging at the bottom? Or am I going to wait to the last millisecond to jump over and hook slide as you turning onto the street? What you going to do? Right? And then they finally moved. He was there all day long, from the morning when I first took Chris to practice to when I took Timothy to when we came home to, like, he'd been out there all day laid up. I got no regrets. Then this morning, I leave out. I'm like, oh, he's gone. Going to drop the boys off. By time. Then I'm coming back and something else out there laid up. I got no regrets. And he in the worst spot now, because now he's so close to the turn where it's like and then where he's laid up at, if you get in the lane, you're going to hit him. So it's like you got to wait till you got to almost turn from the wrong lane to avoid this one here. And he laid up out there like, I got no regrets. But they've been catching it out there. That's the same corner where Calandra saw that deer. It was a deer just sitting out there looking. The deer was on the corner, like looking both ways. And she was like, at first I thought I was tripping, but he was just, you know, all right, then it's safe to go. What's going on, Lil Hawk? What's happening, Thomas? What's going on, Randa Green Mendez? What's happening, Mendez? Angela, what's going on? What's up, C-Walk? What's up, Trinisha? What's up, FC? What's up there, everybody tapping in? I really appreciate y'all, man. I have been sharing a few things. I shared a couple trades that I did with some voiceovers. Yesterday's one I shared yesterday, that would be the last one I shall share like that. I just shared them in an effort to encourage people. I try to figure out different ways to like encourage people along their journey. And with all my doing of anything that I do, I've learned that when you share too much of your success, it becomes a stumbling block for a lot of people. A lot of people is motivation, but for a larger majority, it's a stumbling block. No matter what it is, it can be, it ain't got to be trading, it can be any, because I've done many things in these 50 years that the good Lord blessed me to walk on this green ball. So like, I don't want to like overshare successes. All right. I've always tried to be totally transparent, where I talk about my losses, I talk about my wins, but I never, I ain't gonna say I never, but I rarely used to share wins because I don't want to like create FOMO. All right. I remember when I was in S2F, and everybody used to call the homie Boyd the FOMO king, because he would talk about, you know, if you did this when we called it out this morning, it did this, it did that. And I understood what he was trying to do, but for a lot of people that was a stumbling block, because it made them want to chase and jump into anything. And so hopefully people got a lot from it. Hopefully I was able to explain my thought process clearly, but that's going to be the last one. And I just want to encourage people again that this stuff works. I can't say it enough times, right? Because I know how it feels when you're trying to learn something. I know how it feels when you're trying to unlearn something else to implement something. I know how it feels to be like, feel like you fumbling around in the dark, right? You know, when you walk through the house at night. Let me ask y'all this. Am I the only person that do this? When it's dark in the house and you can't see anything, I close my eyes, and it helped me move better when I close my eyes. Like if my eyes are open and it's dark, I can't navigate right. But if it's like super dark, I close my eyes and I can walk around. It helps me to walk around better if I shut my eyes. But if my eyes are open and I can see the dark, it's crazy, because when you close your eyes, you can't see anything. But when you open your eyes, you can see the dark. And that's just me. It might just be me. But when my eyes are open and I can see the dark, I can't, it's like I feel like anxious. I feel like almost scared. I almost feel like Freddy Jason Killer Man gonna jump out and grab me. But if I close my eyes and I can't see anything, I can move around. I don't know. But anyway, back to what I was saying. All right. I just want you to understand, because I know how it is when you're feeling around in the dark. I want you to just realize, once you have the concepts down, right? You just have to submit to time and price. That's it. Don't overcomplicate it. It's a lot of stuff. Yes, it's a lot of stuff to absorb. But look at it like this. Do you know how much you had to absorb to learn how to drive a car? Do you know how much you had to absorb to go get your driver's license? Do you know how much you had to absorb to learn how to walk, right? Learn how to ride a bike, to learn how to, the first time you made your favorite dish, right? You probably had to read the recipe. The first time, the second time, the third time, the fourth time, the fifth time. And now you probably don't even look at the recipe. You just know what to do. And you know when to get heavy-handed on what seasoning and what seasoning not to get heavy-handed on. It's like you just know. You just know. You probably can't even remember when your parents taught you to read. But you can read. You're reading, be reading real good these days. So it's like we have the ability to absorb a lot of information, right? But when we get too focused on the end goal, not saying lose sight of the end goal, but just don't be so focused on the end goal, right? Take your time with it. And next thing you know, you look back and be like, man, I really remember this stuff now. Just like when you go to the gym, right? You start going to the gym, no matter what, if you're going to bulk up or slim down, right? You have an end goal that you want to get to. You got a fight weight that you're trying to get to. You're either trying to get up to that fight weight or down to that fight weight. But you just go to the gym every day, 3 days a week, whatever your routine is. You just go every single day. You monitor your process along the way, right? You don't go to the gym and try to lose 10 pounds on the first day. You just go to the gym and start trying to fill out your routine, figure out what's going to fit for you. You go in there, you fumble and you bumble around, and you trying to figure out, you know what I'm saying? Hey, what does this machine do? Hey, what does that machine do? Oh, I like this right here. Oh, I don't like that right there. And then, like 2-3 months into it, you done settled into a routine. You already know what you're going to do on certain days. Routine is in there, right? And you're monitoring, you're just losing the weight 1 pound at a time, or you're gaining the weight 1 pound at a time. Whatever you want to do, you're just doing all these little small things to get to this end state, right? You ain't trying to go into the gym and get to the end state within the first 3 days. So don't do that with trading, right? If you're tapped into what I'm saying, if you tapped into my channel, I can only assume that you want to better understand how to trade with ICT concepts, because that's all I talk about on my channel. I give credit what credit is due for people who taught me along my way. But the only thing I share on my channel is ICT concepts, because that's what I do every single day. I don't do anything else except for trade ICT concepts. And I'm telling you, it's a lot to absorb. The absolute best way to do it is to go through his entire core content. This is my humble opinion. Go through his entire core content, right? And put in the work so that when you look at the candles, right, you will understand what price is doing when it's trying to get to where it's trying to get. If you absorb all 12 months of the core content, right? Now it's going to be a lot of stuff in there that's not going to help you every single day, right? It's going to be a lot of stuff in the core because he teach a lot of stuff in there. But if you understand the entire curriculum, once you complete the entire curriculum, all right, you're going to be prepared to know when to take your setup and when not to take your setup. Because your setup will form. Your setup will form at times when you should not be taking it. But if you're not well versed in the entire core content, you may not know I shouldn't take it right now. Right? Just like if you don't understand, because he talk about knowing when economic drivers are coming out. If you don't know that at 10 o'clock, you got some big news coming out and you just learned about the 950 to 1010 algo and your setup sets up and you getting ready to take the trade because you say, okay, the 950 to 1010 algo is going to attack this buy side because we did this. But you don't know news dropping because you're not aware to look for economic drivers. So you don't know I shouldn't be taking my setup right now. I need to wait till after this news. The market is going to give me another opportunity after this news. All right. But that's why I say you need to absorb it all. So when you're looking at the price, you know, just like yesterday when I was in the day before that, when I was doing the voiceover, I was explaining how I was moving my stop. And a lot of people be like, hey, Tim, you're choking your trade. Call it what you want, right? But like I say, if you do all the work, you understand every time you take out liquidity, there's a possibility of the market reversing for however much time, right? And depending on how wide of a range you're trying to trade, it can reverse and come all the way back and stop you out. So why not lock in some profit using strategic stop placement, right? I'm walking you through how I'm moving my stop. But the only way to understand how to use strategic stop placement is to absorb all of the content. Just like when the homie pulled up, can't remember who it was. It was like, do you worry about the wicks? I don't worry about wicks. I don't worry about wicks, right? And the reason why I don't worry about wicks is because I'm putting my stops at a place where I don't anticipate price to come back to because of the clues that the market is leaving. And that's why whenever we take out liquidity, right? Whenever we take out liquidity, I'm adjusting my stop to a safe place right? I'm looking at the price action. Is it giving me a safe place to put my stop to lock in some profit? And how am I able to do that? By going through the core content. I can explain it all day long. I can explain it walking through my trade all day long. But until you ingest and then digest all of the stuff that I'm talking, and until you take in all that core content, you're not going to get it. I can talk till I'm out of breath. I can talk, as they say, till I'm blue in the face. I probably won't get blue in the face, but I can talk all day long. But if you don't take in all of the core content, you're not going to get it. You're going to constantly ask me, hey, Tim, how did you know to do that? Hey, Tim, how did you know to do that? Hey, Tim, how did you know to do that? How do you know if this PDub rate is going to be effective or if it's just going to be a speed bump? Right? You notice on the commentary, I'd be like, I'm marking out these PDub rates because I want to see how price reacts when it get to that PDub rate. Right? Here for the note takers. For the note takers, come here for the note takers. When you hear me saying I'm marking out this PDub rate because I want to see how price reacts when it gets there, right? If it's above, if I'm going long, we're talking on a long trade. If it's above price and I mark it out and I say I want to see how price reacts when it gets there, right? I either want to see one or two things. If I mark out a fair value gap that's above price and I'm in the trade going long and my target is above that fair value gap, right? I want to see price blast through it. It ain't got to do it in as soon as it touch it, but I want to see price blast through it, right? I expect price to get, once it get up to like a fair value gap above me, I expect it to dabble, come back, dabble, come back, dabble, come back. I want to see it keep dabbling. And once it keep dabbling, I want to see it push through it real hard. It can come back down, but I want to see it like rip through it. Once it rip through it, right? I'm like, okay, cool. We finna get on through, because once it like, and when I say rip through, I don't want to see it dabble, 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 dabble through it. I want to see it dabble, keep dabbling in it. And once it dabble in it, I want to see one of them 1 minute candles go spike up real fast and come back down. Then I'm like, okay, we finna keep going, right? And once it get above it, and then take out a high, once it get above that fair value gap and take out a high, I would take my stop and move my stop up under that fair value gap. Maybe even put it at consequent encroachment, just under consequent encroachment of that fair value gap. And if we put a breaker right there with that fair value gap, I'm fully confident that I can put my stop there. Right? And if my target too far away, you know what I'm saying, that it's gonna come back and get me down there, I probably need to be reassessing the trade anyway. But once we blast through there, I'm fully confident I can put it there. Now, if you're trying to go for 40, 50 point trades, right? You got to understand where you are in your trade. Don't be adjusting your stop to a fair value gap that's 5 points into a 50 point trade. Now, if you're adjusting your fair value, if you adjust your stop to a fair value gap that's 2.5, 3 points into a 5-point trade, that's over half of the trade. So do the math. If you're trying to get a 50-point trade, yeah, it's okay to move your stop up if you're moving it up to a fair value gap that's 20 points into a 50-point trade. You got to do it with some sense. Okay. Okay. Tim, cut this into a gem. No. Hey, the market about to open, and we didn't even get no overnight price action. What's up, everybody? So true. I'm just sticking to what Jay taught me, similar to ICT, 4-hour gaps and stop sign is all I want to execute this year and see where I'm at come the end of the year. That's what's up, man. That's what's up. What's going on? ICT live now. Love you, Tim. Have a good one. Check back later. Appreciate you. Appreciate you for tapping in. What's up? What's up? What's up? Can you cut this? Look, why you be posting stuff 19 times? Is your cheap phone just doing that? Or is it you just trying to get my attention? Hey, we did not look at any overnight price action. Word on the street, ICT is live. Let me go through this real quick so y'all can go pull up and listen to what Miguel has to talk about. Overnight, we closed yesterday at oh, wait a minute. I got to go. I can't do that. I can't get on Al Gore's internet and go say what's up to Spalene. Hey, if you don't know who Spalene is the SPY, the ETF that tracks the SP 500. Around here, we call it Spalene. We wrote a song for you. Want to hear it? Here it goes. Sing it with me. Spalene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Oh, Spalene, what is you about to do? Spalene, nothing can stop me. I'm all the way up. Right now, we're all the way up and filling in the remainder part of this SIBI. The remaining part of this SIBI right here. We are all the way up filling that entire SIBI in the pre-market shenanigans. If we look at the 15-minute chart and look at the pre-market shenanigans, look at that. We have filled that entire SIBI. This got to be some kind of, oh, that's before the news. I thought that was going to be at the news. That's before the news. That's 8 o'clock. The news came out over here. That's crazy. That wick looked a little out of sync. Man, my what's the name updated yesterday, and I don't have see, I got delayed data again. I went on ahead and signed out. Yeah, see the news candle is bigger. It's like at 8:30 here. But oh, we did come down right before it. Right there. No, that was the 8 o'clock candle on the other. I don't know what's going on with the SPY. Had a weird candle. All right. Let's look at the price action real quick, and I'm going to let y'all go because the market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amount of notes. And I'll see you tonight. Let's go over here. Boom. This is where we closed at yesterday. Yesterday. That's the close. And then we just marched up. The market just marched up. It did the same thing the day before. The market just marched up, right? And let's see if we can get any kind of small details out of here. Right? Let's just look at what price did right here. We're not even going to go back and look at all of this over here. You know what I'm saying? Because we can go into great detail on what it was doing. But it pretty much just went up. So let's see what the big boys say. Breaking news: Dow pops more than 100 points as traders bet bank crisis has stabilized. Live updates. I'm struggling to see because I ain't got my glasses on. Them letters go to dancing like that when I don't have my glasses on. Okay, so got the candles all squanched up. Move out the way, children holding hands. Got the candles all squanched up. All right, we closed here. That's the little after hour. Okay, here it is. This is the open of the Asian in Sydney. So we opened up, small little consolidation, popped up. Small little consolidation, popped up. Consolidation, popped up. Increase, increase. Now, here we are. This is midnight there. So all we've been doing is climbing. These are 15-minute candles, just been climbing. Consolidated. Then when midnight, at just after 11, start to climb again, right? Then just after midnight, around 12:30, started consolidating. And then right at 1:45, bang down, we took off, popped up to the upside, right? Dropped back down into that fair value gap, and then pushed up again, right? Coming into the London at 3 o'clock. Once we got into the London, we pulled back a little bit, but just, nice, smooth little motion, nice, smooth little top of the house motion. See, there's the roof. Here is the roof. Here's the church. Here's the steeple. Open the door. There's all the people, right? And we pulled back just a hair, came down into, looked like maybe consequent encroachment of this 4 o'clock wick, this 4 o'clock lower wick, the one where we pulled back just a little bit, right? Yes, look about consequent encroachment, maybe a little more. Bang out, blast off, right? At 8:45, after the news dropped, boom, blast off. I'm assuming GDP numbers were good. What was GDP numbers? Does anybody know what the GDP numbers were? If you know, put it in the chat for me, right? Took off again. The last GDP is usually the one that's the least volatile unless something crazy happened within that quarter that was unexpected, but it's usually the least volatile one. Then after we went up, and then we started, wait a minute. I'm all on the wrong freaking day. I'm on the wrong day. I'm like, wait a minute. How do we? I did a whole lot of talking for nothing. I did a whole lot of talking for nothing. On the wrong day. Okay, here we go. Again, we closed. I squanched it up too much. We closed last hour. This to open. Consolidated. We pulled back just a hair, right? Consolidation pretty much. Consolidation pretty much. Then at 11 o'clock, we started to climb up, right? Right around 1:45, 2 o'clock, we pushed up. We took out the buy side on this 130 candle, right? Slight little pullback, set an order block there for the 215 and 230 candles, set an order block, consolidated some more right around London, open throughout London, all the way up until 6 o'clock. We consolidated from 3:30 all the way up until 6 o'clock. Just nice little consolidation. Then at 6:30, we got a pop above that consolidation, right? Taking out the buy side liquidity above that. Sort of, consolidation up until 8:15. 8:15, we dropped back down into that BISI, right? Dropped back down into that BISI just before the news. Right when the news dropped, we popped up, took out the buy side, went down to the low, close to the low of that same BISI that we dropped down into just before the news. Then we pushed up just a hair after the news dropped. We pulled back down into this potential order block there, had a nice reaction off of it. And now that puts us where we are now. The market is open and we're just kind of dilly-dallying in that area there. Let's put some lipstick on the chart, see if there's anything of value around here that we want to point out. Look for any gaps. Yes, we're right there inside a new week opening gap. We just touched inside a new week opening gap. That new week opening gap is from, I'm number what? It is from Monday, the 27th. Yes, Monday, the 27th of February. Yes, so that new week opening gap we just touched is from Monday, the 27th of February. And that is where we are. We just took out the we took out, I ain't gonna say just, but we took out the weekly high. We filled in, like I was saying before on the spot, this the remainder of this hey, look at that. The remainder of that fair value gap was right in line with another right in line. Oh no, it wasn't. Oh no, that's that. I'm sorry. I forgot my box beat extending. I thought it was a what's name there, but that weekly high was the low of that. The rest of that fair value gap, I thought that was another weekly gap there, but I forgot I got my box set to extend. But the low of that fair value gap was the weekly high that we just took out. And then we just got into another new week opening gap there. Prices just kind of moving. It don't plan, don't stopping. It's just moving up. It's moving up. Oh, real quick. This right here came in forecast previous. Okay, came in line. Okay, then that's what's up. In line. Oh yeah. Yesterday, y'all heard me talking about positions and getting out of positions. And let me do this. As y'all know, right? This is what I had set for targets, right? And I got out yesterday when we hit that target right there, right? I got out yesterday when we hit that target right there. And I know you may say like, hey, Tim, if you had this as the target above the swing high, why didn't you just hold for that right there? Right? Two reasons. One, I'm not greedy. Bottom line up front, I'm not greedy. One, I'm not greedy. Two, whenever we take out buy side or sell side, there's always an opportunity for the market to turn back around. Even if it only pulls back or retraces, there's always an opportunity for the market to turn back around. A bird in the hand is worth way more than two in the bush, right? 3, I'd rather take profit that I know I have than to hold in front of a potential market moving event, right? I'd rather take the profit that I know that I have. It's a strategic point of interest, right? Now, if If those did not exist and I only had it like this right here, I would still be in the trade. I would still be in the trade. If those did not exist and it looked like this, I would still be in the trade and my profit would be locked in at this 73.75. If those other targets was not there, I would still be in the trade, even though we were in front of a potentially volatile event. If those targets that I had down here was not there, if that was not part of my plan, I would still be in those trades. And right now, this morning, my profit would be locked in at this 40.73.75, and I will be holding for this 40.90.25. But because these were a part of my plan, right there. See where it says buy side liquidity purge target, right? This is where I expect price to get to after purging this buy side liquidity right here, right? After purging this buy side liquidity right here, this is the purge target, right? I expect we could get up here and dabble, but once we hit that spot right there, that's the purge, right? That's the purge. So this is where I'm cutting sling load. If I'm in a trade, I'm cutting sling load right there, right? Every blue moon, I might leave runners to see where it can go. But 9 times out of 10, I'm cutting sling load. And I don't care what it does after that. You would drive yourself crazy in trading if you always look back and be like, if I would have held, if I would have left runners, if was a fifth, we'd all be drunk. Do not do that to yourself. Have your plan, stick to your plan. You hear people say that all the time, and I can't tell you what it's going to take to get you to the point that I'm at right now, where I can stick to my plan and it don't hurt me to see what happens afterwards, right? One thing you need to stop doing is going back to look and see, because I hear people say it all the time. Man, if I'd have held on to that, I have 700% right now. Stop doing that. Stop doing that. You're torturing yourself. Cut it out. Right? So again, I cut sling load there because that was part of my plan. Purge target 1. Right? This up here, purge target 2. Right? That's just for my future, like, that's for my future to look back and study. That's for me to look back and study. Whenever you see me mark up a chart like purge target 1, purge target 2, right? This is my target. This is my stretch goal. Y'all hear me talk about stretch goals all the time, right? And if you look up here, look at here, right? See this high over here? This right here could be a stretch goal. You can start to watch. You can start to watch, like you can mark up your charts like this right here. This thing. Then you come up here. It's that 41.50. Uh-oh. 41.50. 41.51.50. Right? You do stuff like this right here. And what is that? Why did I pick that one right there and not pick this one right here? Right? Why did I pick that and not pick that? Let me show you. Right. Actually, that would be a good one. I can't see the line. I thought that was lower than that. So we can bring that back now. We can bring that back now. We can bring that back now. Because I thought this was lower than that. That's why I be needing to draw stuff out. Uh-oh. Boom. I thought that right there was lower than that, but it's not. Right? You can start to do stuff like that. And once you hit your targets, right? This right here can be your low-hanging fruit that you want to get to, right? And then once you start back testing and studying it, you could be like, hey, I'm easily hitting the way price moves. It's so easy to hit this right here, right? And that can be your first stop, right? And that can be your stretch goal, right? Or you can just shave. Like you can shave at here. Let me move these green lines out the way because they're starting to get on my nerve. Right. Right. Then you can just start to you can start to like study how price is moving, how fast and aggressive is price moving, right? And then you can just have multiple shave points, and you can just read the price, watch the price, just look at the price and be like, okay, looks like we're in a market make a buy model. You know, I think we're going to complete the buy model here. I'm buying it for a long time out, right? This is my terminus right here. This high is my terminus. I'm going to shave at this. That's a purge target above this high, right? That's a purge target above that high right there. This one, that one. I looked at the swing high here. I think when I marked it out, I used the daily high. But, you know, let's look at the swing high. That's above that high right there, right? This is my purge target above this swing high right here, right? And this is my terminus target because that's where I think the market make a sell model is going to end, right there, above that high, right? And how do you come up with these points? How do you come up with these points? These price points? By running your Fibonacci's. I ran that one there to see how far I thought it could go. But to get the projections, let's try. I think I did them on hourly candles. I think I did it on hourly candles, right? And that right there is from the low of the Pang leg, right? That's from the low of the Pang leg. From the low of the Pang leg to the previous high, right? Went from the low of the Pang leg to the previous high, stretched it out, and now it's just the standard deviation above the areas of interest, right? And see, when I did this one here, this was a standard deviation above this high. This was the standard deviation, well, the deviation marker, because they broke down into half deviations, right? This was the deviation above that swing high. This was the deviation above that swing high. That's where I got that price from. The 40, 90, 25 is the deviation above that high. That's where I expect price to dig into to purge out the buy stops above that high. 40, 59, 50 is the deviation above that swing high. That's why I expect price to dig into above that high. And then look at what the price did when it got there, right? Once we took out this high, right, we consolidated at the high. What they doing? Soaking up liquidity, right? Then once we got to that purge point, we consolidated right there. What do they do? Soaking up liquidity. Then we pushed up. And now we're coming very close to that one. We've taken out the high. The high has been taken. And now we're inching our way up to that purge point, right? That's how you get the projections of where you want to set your exit targets based off once you run out the liquidity to the downside or the upside. It works both ways. Once you run out the liquidity, boom, and then get the pang out, right? Let's go from the low of the pang out leg back to the previous high, right? Pang out leg, that's the high, right? We went up and we took out, AKA go back to that breaker. Go from the low of the pang out leg back to the high. It's either going to be the high of the breaker or the high of that leg. Because if this red candle, if the wick was above that green candle, then you would put it on the wick of that red candle. But the breaker is right there. Go back over there to that breaker, right? But use the highest high. But go over there where that breaker is. From the low of the pang, like the pang out leg going to be over here. This the pang out leg. Pang out! That's the pang out leg right there. Go from the low of the pang out leg back to the breaker, right? Because when you get that pang out, it's going to give you a breaker from, you know what I'm saying, after, because you want to look after you run out some liquidity. Don't just jump in there anywhere. Tim said, get to the power out leg and then, no, run out your sell side or your buy side. Let it run out the liquidity and then give you a sign that I'm ready to reverse, right? And you want the liquidity. You want to be running out liquidity at an important place. Like, you know what I'm saying? Running some liquidity where the market is likely to be reversing up like a higher time frame, a higher time frame level somewhere. Something that's important. You know what I'm saying? Don't just be looking for any, you know what I'm saying? Don't be looking for any low or any, you know what I'm saying? Anything. You feel me? Right? And you look like looking right here. All right. Can somebody, we're gonna make this interactive for 1 second for I think the 31 people that stuck around and didn't, you know, hightail it to go see what Michael wanted, right? Looking at this area right here, right? Where we came down on this wick right there. This is where we got our Fibonacci set up at, right? Looking to the left, right? What sticks out in your mind as significant looking from the left of this candle right here, right? Give me an arrow or something. So looking from this candle, turn this off. Looking from this candle, looking back this way, right? What's significant from this candle back that way? Why, after running out sell side in this area right here is a significant spot, right? Can you explain that one more time? That's real vague. The swing low. You feel me? That's true, right? It ain't no wrong answers here. It ain't no wrong answers. The swing low. Father Legend said the swing low. Right there. That's the first thing his eye saw. We just took out some sell side liquidity on a daily level, right? We just took out sell side liquidity on a daily level, right? What else? What else we see over there? I can't spell. What else we see over there? Going back to the breaker. Okay, I'll get back to that in a second. Remind me if I forget. What else we see from this candle right here pointing back that way? What else we see? right? This is this right here, Father Legends. That's the sell side we just ran out. That's important sell side that we just took. That's a higher time frame PD array that we just attacked, right? That's very important. What else do we see coming back this way, right? What else do we see coming back that way? Order block. Boom. We just came down into an order block, right? We just came down into an order block. We just came down into an order block, a bullish order block. I'm not typing all that out. I'm not typing all that out. We just came down into an order block, a daily order block, right? We're inside a daily order block. We took out daily sell side, right? Took out daily sell side. What else? It's one more thing over here that we just came into. It's one more thing over here that we just came into. Right? We came into it or came very close to it. Close enough for government work. Right? What's one other thing we would be paying attention? What is that blue arrow pointing at right now? What is this blue arrow pointing at right now? It's one more thing that we would be paying attention to that's in that area that we just got, you know what I'm saying? That we just hit in that locale. It's a lot of stuff right around there. And then on the lower time frame, we got a that broke to the upside, right? I'll give you a clue. It's got something to do with this. Right? Boom. There you go. There you go. There you go. We coming down into all of that stuff right there. Right? So now, let's go back down to the hourly candles. Going back down to the hourly candles now. Right? Get out the way. Now, let me hide this for 1 second. Now, Father Legends was looking at this swing low right here. Here to Learn to Shell was looking at this order block right here. Right? We got consequent encroachment on that wick. These are all higher. Hey, Cindy, get off my screen. These are all higher time frame PD arrays. These are important spots, right? Price comes down. Kiss the sell side that Father Legends was watching inside the order block that Here to Learn and Share was watching, right? Swung up, came down, took out that sell side, right? Took out that sell side right here. Right there at a daily sell side liquidity, a day inside a daily order block, right close to a daily consequent encroachment of a wick inside an hourly fair value gap. Matter of fact, that's the remaining piece of it that we already got an institutional order flow entry drill off of this fair value gap right here, right? When we came back to it, it gave us another institutional order flow entry drill on that same fair value gap on the daily. I mean, on the hourly, right? When we got the institutional order flow entry drill the first time, we took off, right? We came back to this higher time frame PD arrays kiss that same fair value gap, right there at consequent encroachment of that wick. When you can't get to consequent encroachment and the price rejects off of it, that helps solidify your thesis. The market is so bullish right now, it can't even get to consequent encroachment, right? So once we touch that and we got the pang-out leg, now going back to what Mimi was saying, Mimi anti-stush. Okay. When we come down, take out the sell side liquidity of a higher time frame, right? Higher time frame PD array, get the pang-out leg, right? Once you get the pang-out leg, that's the market saying, okay, I'm ready to go this way, right? I've run out this important liquidity. Pang-out! I'm ready to go this way. That's when you can take your fib tool, get your Fibonacci from the low of the pang-out leg right here, right? Pang-out! Right there. That's your pang-out leg. From the low of the pang-out leg back to the previous high, right? The spot where the breaker resides. If this red candle right here, if that red candle's wick was above this breaker's wick, you would put the fib on the highest high. You put the fib on the highest high. But I take to go back to where the breaker is so you know where to put the fib, right? You're looking for that breaker after taking out the liquidity on the higher time frame to anchor the fib to, from the lowest low to that breaker, to get your projection of where can this run get to, right? Where can this run get to? Oh, I'm in the wrong spot. Boom. Just like that. And now, once you run it, there's some other stuff in there that I don't have showing, like the 5, that 0.5 right there, right? I took that 0.5 out, that one there. I took that one out because once I got ready to get into my trade over here, when it came back down into that breaker right there, because I took my trade, I took my positions when we came back down into that breaker right there. We came down into that breaker. Well, Tim, I thought you said you trade fair value gaps and breakers. I do. There's the fair value gap right there, right? I'm watching how price is trading. I'm waiting for it to get down into this breaker because I'm trading options. I want to get my best price. I don't want to just buy it as soon as I get into this fair value gap, because theta is the Greeks are going to kill me. So I'm not just going to buy it as soon as it touches that. When I know it's a breaker there, I'm watching how price is trading. I'm going to give it down till we get into this breaker. Once we get into this breaker and I see that we don't have any imbalances down here, that's when I'm buying, when it get into the breaker, right? And then on top of that right there, this is why I say you got to know all the concepts. If you don't know all the concepts, you're doing yourself a terrible injustice. A terrible injustice. What's that right there? What did I just mark out right there? Can somebody tell me what I just marked out right there? Here's the breaker. Here's the breaker. And what did I just mark out right here? With these, when I went from the top of that wick to the bottom of that wick, I mean the top of that wick to the body, the bottom of that wick to the body, right here surrounding this up close candle right there. What do ICT call that right there? What does ICT call that right there? This little space in between 39.88.25 and 39.84.25. What does ICT call that little area right there? Implied fair value gap. Implied fair value gap. Right there. So looking at this fair value gap at the top of the breaker, right? Watching how price trading right there. Knowing that the breaker goes all the way down here. Knowing that there's an implied fair value gap right there. I'm not going to get into an options trade right here. Right? Especially when the market is not giving me the divergence that I want at this point. It wasn't giving me the divergence that I wanted at this point. Right? Wasn't giving it to me. But when we got down here to this implied fair value gap at the bottom of this breaker, the divergence that I wanted was present. So I went in. I'm going in. I'm going in. I'm going in. I'm going in. And I'm going to go hard. And I'm going to go hard. I went in. I went in right there. So that's why understanding all the concepts are muy importante. So again, quick breakdown, and I'm going to jump off because I've been running my mouth forever. Forever and ever. Right? I will always be there for you. Forever and ever. Higher time frame PD arrays. OLO, aka sell side liquidity, right? Order block, right? Order block came into it. Daily wick came into it. All higher time frame PD arrays, right? On the hourly candles. Once we come down into the higher time frame PD arrays, taking out the sell side, right? Come down into the higher time frame PD arrays, taking out the sell side, hit an hourly PD array, get the pang out. Pang out! That right there is telling you, I want to go this way now, right? Now you're looking for your entry. You're looking for your entry, right? Price comes back down into the breaker right here. Implied fair value gap. There's your entry, right? There's your entry right there. You want to know how far the trade can go. You can take it from the low of the pang out leg to the previous high, right? And then once you get your entry right here, right? You get your entry, and now you're feeling comfortable about it. I forgot to share this piece of it too, right? Whenever you're looking for an entry, right? It's always a nice thing when, I guess I could have left that. Yes, okay. There's always a nice thing, right? When the market will give you oh, Tim, you're drawing. No, I'm not. No, I'm not. When the market gives you institutional market structure. Y'all remember that? Y'all remember when ICTV talk about institutional market structure? This is why it's always important to know all of the concepts. Institutional market structure. What is institutional market structure? Right? So y'all know I be having to have stuff perfect, right? Y'all know I be needing to have stuff perfect, right? What is institutional market structure? Right? Now, what is this right here? This 8 o'clock candle that I'm holding. Let me stretch it out so y'all can see this a little bit better. Right? I can hide this, raise him away. Right? This 8 o'clock candle right here. Right? Give me a little arrow. Excuse me. Those 3 points I just pointed to right there. What are those? Right? This point right here, this point right here. So this 1500 candle, this 8 o'clock candle, and this 1300 candle. What are those? What are those 3 points right there? 1, 2, 3. This one, and this one. Those 3 candles, they make up what? What? Each one of them, they're separate. This, and this are all the same thing. What are they? This point right here, this point right here, this point right here. What are those? I know it's a delay, so I got to wait a second. It ain't that much of a delay. Swing lows. There you go. You overthinking again. Overthinking again. They all the same thing. That's true, but you overthink it again. Yes, swing lows, swing lows, swing lows, swing lows, swing lows, right? What makes them a swing? We simplify. Right here, see right here, see what here to learn to share, see what you just did, right? You went deep. I used to do the same thing. I be just overthinking it. Start throwing out jargon that I heard my favorite trader use. Overthinking it, right? Swing lows. They're all swing lows, right? We're gonna keep it simple. When I started keeping this ICT stuff simple, it started making so much sense, right? KISS. I think about when I was in the military, we used to tell our soldiers, KISS. Keep it simple, stupid. KISS, right? What makes this a swing low? You got a low with a higher low. Let me move this line so y'all can see. You got a low with a higher low to the left and a higher low to the right. This swing low right here, it look like this right here. It ain't perfect. It ain't pretty, right? Right. This low right here got a higher low to the left and a higher low to the right by just a little bit, right? This one over here, the same thing. This just a little bit higher, just a little bit higher, just a one tick. Look at that, one tick higher. And then that low over there, this one all like this right here, right? So you got 1, 2, 3 swing lows, right? This is the low before the Python leg. This is the low of the Python leg. And this is the low of your entry leg right there, right? But what is beautiful, what makes the bird sing in my head when I take an entry like this right here is when I look at it and I see institutional order flow that creates a swing low. That's a low with a higher low to the left and a higher low to the right. A low with a higher low to the left and a higher low to the right. This entire area where we ran out liquidity, got the Python, and I entered right over here, the liquidity we ran out, the low of the Python leg, and the low of my entry leg create a swing low. That's the institutional market structure. When you can see that institutional market structure, bing, 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 you be like, boy, the probability of me being on the right side of the trade just went up exponentially. Hear me? But without having all of the understanding, you won't be able to confidently enter this trade without worry. You're going to get in that trade and be like, man, is it going to hit my target? Is it going to go up here? Is it going to hit this target? Is it going to hit that target? You can't confidently know it, right? You can't. How was I able to go out on Al Gore's internet, right? Right? How was I able to go out on Al Gore's internet on March 20th, right? When the candles look like this right here and say, these are my targets. Notice now, this before I got into my trade. I had my targets mapped out already. These are my targets mapped out before I got into, I ain't getting into the trade until we come down here to this breaker, right? This breaker, this implied fair value gap right here. This is where I'm looking to get into a trade, right? Because when we hit this fair value gap, we're still just chilling, right? We still just, I ain't getting the divergence that I want to go back to the upside yet, right? So before all of this happened, I already got it in the scope. I'm just sitting there waiting for the right time in price. I ain't even moving. I'm here with. I'm waiting on the right time and price. And when the time and price come together, the right time, the right price action, somebody just dropped. Don't nobody know where the bullet came from, but somebody just dropped. Because I was there way before they got there. I was there waiting way before they got there. And I knew exactly where I was going because of what does this say over here? What did I say? And I did not say, hey, watch what happened. Look, I'm the greatest. What did I say? I said, blow this up. Where's my plus? I said, the only way to learn to trust ICT concepts is to read the price and price only and call the move before it happens. Being a Monday morning quarterback, aka hindsight, would never build your confidence. My 2 cents. In order to build your confidence that this stuff works, you got to understand the concepts, read the price, and call the move before it happens. The more you see it happen, the more you will build trust in it. Is it going to happen right every time? No, it's not. Will you get it wrong? Yes, you will. But do you get it right more than you get it wrong? Yes, you do. Yes, you do. If you're highly selective in the entries you make with real money, your success rate will be through the roof. Through the roof. For 2023, every time I have taken a trade with real money, it has been successful in 2023. In sim trades, I've taken a few losses in sim trades. Why? Because with the sim trades, I'm testing stuff. I'm feeding my itch to want to be reckless Randy, risky Randy, and reckless Rachel. But when I'm putting real capital on the line, I'm sticking to what I know unequivocally, I know works. Therefore, thus far in 2023, I'm still batting 100%. Will I continue to bat 100%? I doubt it. But I would very much so love to, but I don't keep that expectation. I only put real money on the line on stuff that I know for a fact has worked in the past and I am fully confident in. If it's something I'm trying to flesh out, I do it in sim. If it's something I'm practicing, I do it in sim. But if I see something coming like this, and I know 100%, and I know it might be somebody sitting out there saying, Tim, well, why didn't you just say what you was going to do instead of putting all this other gobbledygook on the screen, right? The same reason why Michael J. Huddleston don't just say, get in here. He puts the gobbledygook on the screen via tweets. He'll say, note buy-side liquidity, such and such, such and such. Note the 1019 fair value gap. Note this. He just point out something, and it's on you to go look at your charts and be like, okay, just like this right here, when I shared this right here, I said, to build a confidence, call the move before it happens, right? Looking at the price, read the price and price only, and call the move before it happens, right? I got eyeballs up here at the buy side purge, eyeballs up here at the buy side purge, right? If you understand the concepts, right, then that's when you go in here and start looking. Where do you look? To the left, because ain't nothing over here to the right. You look to the left for clues. Okay, if this way he looking to go, right, what has price done? Price has taken out sell side, given us a pang out, and now it's consolidating. Based off the stuff that we talk about on this channel alone, it's giving us a pang out and it's consolidating. Let's do the field. Oh, he already did that. He already got the field projections on there for me. Thank you, Tim. So it can possibly go up to 40.95 based off of this, because you got the pang out leg and it's consolidating right there for a whole bunch of hours. So knowing what we know, this is probably going to be equilibrium for a price run. So it's going to go up there. Okay, if it's going, oh, okay, now I see. This is buy side. Thanks for marking that buy side. And this is the purge target above that buy side. Oh, let me go in here and find a setup where I can potentially ride it up to the area. Where am I going to set up in? Am I going to try to get in on this consolidation? No. Right? No. I'm not. I'm either going to wait for it to break out of this consolidation and then give me an entry, or drop down into a discount PD rate and give me an entry. I put it in a bowl for you today. That's the spoon. I already ate the cereal, but here, take the spoon. Take the spoon. I don't know. I just like helping people. I'm not a teacher. I'm nobody special. I'm just some simple dude from Fort Lauderdale, Florida, that learned something that changed my life. And I want to help as many people as possible to understand it. Right? I've learned things from a lot of great people. I've paid for some great courses. I've paid for some sucky courses. But the stuff that I learned from Michael J. Huddleston is unmatched. There's nothing out there that I've seen that comes remotely close to it. So that's all I trade now. And that's all I share with people. Because he shared it for free. And it's the best thing I've ever seen. So I share it for free. And I always give him credit. And I always lead you back. People can say, hey, you an ICT fanboy. I give credit what credit due. When I was trading Jason Swedish stuff. Now I know Jason. I don't even know Michael. I know Jason. I was telling people where I learned it from. Right? Nobody called me a Jason Swedish fanboy. They just were like, oh, that's dope. Let me go check him out. But for some reason, when I talk about ICT, I'm a fanboy. I defend him. I'm on his jock. You don't know that man. Why you jocking him like that? Most of y'all don't even know Mark Monroe. I know Mark. I got Mark's phone number right here. I can call him right now if he wasn't sleeping. Most of y'all don't even know Mark. But y'all sure be shouting him out. I don't know Jolene. I know Kiki. I got Kiki number right here. I know PDub. I got PDub number right here. I know these people. I can call them right now. But for some reason, when I give ICT credit, I'm on his job. I'm a fanboy. Tell you what. Figure out what worked for you and do that. In the meantime, I'm going to keep doing this and I'm going to keep sharing it with people who want to hear it. My block game real strong. My block game. We did what? What is that? I got to look that up. I ain't even gonna hold you. I ain't gonna. I got to look that up. The bourgeoisie is a class of business owners and merchants which emerged in the late Middle Ages, originally as a middle class between peasantry and aristocracy. After the overthrow of the aristocratic reigns in the 17th, 18th century, the bourgeoisie became the upper class under capitalism. Man, Father Legend just taught me something. Is that my lawn man already? This dude be coming through pretty frequent. I hear them killers out there about to get him. My neighbor got these little killers. They be out there. Yeah, bougie. Yeah, it's like that's where bougie come from. Where my block button at? Where my block button at? Where my block button at? You feel me? I appreciate that. Hey, man, I'm about to go. all cause Robinson that came in here. But that I ain't know what bougie. I ain't know that was like. I ain't know that was like a class of people for real. Like I always heard the term bougie, but the bourgeois. They got yeah. It was like, you know what I'm saying, a different class. And then once they overthrew the aristocratic reign, they like right up under. It said they was right up under the capitalism, right? They was like the upper class up under. So they wasn't like the top tier, but they was better. They said they was in between. They was between peasantry and the aristocracy. And so they was like in between. They was like the middle class. And then, you know what I'm saying? So hey, middle class people, we supposed to be bougie. Cause we the bourgeois. We're the bourgeoisies. We the bougie class. I just got learned something. But hold up though. Look how Buddy posing. Before I get out of here, let me show you how Buddy posing on him. Strike a pose. Strike a pose. Ooh, strike a pose. Wait, oh, where did he go? I thought it was gonna blow up the picture. Oh, there you go. Look how Buddy posing on him. Ew. Ooh. Ooh. Look at the footwork. Look at the footwork with the red stockings. Look at the footwork with the red. Ooh. Ooh, kill him. Ooh, kill him. Ooh. Look at the pose. Look at all of them. Look at them. Ooh. Ooh, 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 kill him. Ooh, ooh. You know what else I learned from a nursery rhyme? Right? Macaroni back in the day was like how people say, like the young kids be like, they drip, or I got too much sauce. You know what I'm saying? Macaroni was like pretty much the same thing. Cause you remember that thing? Yankee Doodle went to town riding on a pony, put a feather in his hat and called it macaroni. Macaroni was like, you know what I'm saying, drip. You know what I'm saying? Macaroni was cool. Like, oh, I got too much sauce. Macaroni called it macaroni. Hey man, that's all I got, man. I appreciate y'all for hanging out with me. Hopefully I was able to share something that made sense to somebody. Somebody asked me to snip something out as a gem that I don't remember right now. I truly jollipies. I truly do. I might think it up another time. Hey man, I'll see y'all tonight. And for the price action recap, man. Y'all enjoy y'all day. I'm gone. Yep.